I'll call the Metropolitan Audit Committee meeting to order. Approval of minutes.
Move approval.
Second. Any discussion? All in favor?
Aye.
Okay. Mark?
Okay. We have several audit reports, internal audit reports that were issued since the last meeting. So we have some the in-charges for those audits are going to discuss those topics. And Seth Hatfield did the Metropolitan Transit Authority revenue collection process, so he's up first.
Okay, so this audit, MTA's revenue collection process, it's going to be on page 13 through 16 in your workbook. And this audit, it focused on the controls around MTA's self-generated revenue. Our first objective was to determine if cash receipts are complete and accurate. So for this, we compared the amount collected in fare boxes to what was deposited to the bank, made sure those matched. We also looked at their contract revenue for major contracts like the parking at Music City Central, the Dunkin' Donuts at Music City Central, their advertising revenue contract, and ensured that they were getting all the revenue that they should be getting. The second objective was cash receipts, to ensure cash receipts were deposited within 2 business days, which is their internal policy. 95% of the cash deposits were made within 2 business days. For the 5% that weren't, they all made it to the bank, just it was a little bit later, within a week they made it. We also looked to make sure there was segregation of duties for the invoicing, handling, recording, and reconciliation of cash receipts. The only thing we found there was in the Music City Central and the ticket office, there was cash being transferred between the employees and the supervisor, and both parties weren't agreeing on the amount, so we just said they should agree on the amounts before the transfer, just in case if any funds come up missing, you would know who was responsible. And finally, we determined that cash receipts were secured from the time that they're taken in to when they made it to the bank. So there was really good controls there. The observations, we had 3. The first one was the custody of cash I just talked about. The second was about advertising revenue. So they have a contractor for advertising. Each month they give them a check for the advertising revenue along with the monthly report. So we just thought, since MTA is installing all the advertising, we thought it would be a good control just to keep an internal listing of their advertising assets with advertising so they could compare their listing with the monthly report. And finally, in regards to completeness of revenues, outside of the bus driver kind of being the gatekeeper for their bus, we said there weren't many controls to ensure that they were getting all the revenue due them, like if somebody bypasses the bus driver. We had a recommendation there. They agreed that controls for fear evasion were important, but they didn't think that our recommendation would be possible. However, they did have some suggestions about how they would kind of combat fare evasion. So I think that's all I have. So, oh, I'm sorry, Ed Oliphant, Chief Financial Officer from the MTA is here. So if you have questions for either of us, we're here.
Seth, just one quick question. It's pretty minor. I noticed from 2015, just on your chart here, 2015 to 2017 is actually the adult fares and all the fares in total decreased. And here we are at a time looking at transit and so forth, but the fare revenue decreased.
Yeah, I'll let Ed, I know part of that was free rides or free transfers, and that affected it. But I'll let Ed.
Right, that's what it was. It was the institution of the free transfers. In other words, our former policy was that you would, every time you got on the bus, you would pay a fare. And working with the mayor's office, we determined that they would supplant some of that in order to have, if you were going to take a 2-seat ride, you'd only have to pay once. So it's 100% due to the free transfers.
Okay, very good.
Mr. Chairman, thank you so much for this. How do we count passengers?
It's,
through the fare box. In other words, the fare box has to beep when anybody gets on, no matter what type of payment, media, cash, or anything, fare box beeps to let the driver know, and he also has a screen console to tell him what was just paid for, so.
Well, okay, so how do you know that the driver's collecting the fare and not collecting the fare for themselves, so to speak? I mean, don't you have to match the passenger count with the fare backs to in fact know?
Which we do. We look at our average fares
But
collected.
then how do you count the passengers? You have to count the passengers separate from the fare box because it may not ever reach the fare box.
Correct, but in analyzing revenue divided into the fare, divided into the number of riders that are counted on the fare box.
But you don't know that that's the number of riders who were in fact on the bus.
well, that kind of goes back to the fare evasion. And
Yeah.
you might want to talk about how,
I mean,
you
the
talk about guest
automatic
riders,
passenger
and just making sure
counters.
more people.
Right, one of the things that we're going to implement, right now, the Regional Transit Authority is doing, having secret riders, which we'll have throughout the system to observe that as well.
Was there any video?
Yes, we also have video. If there's a question, we do have video that we can review.
So you can go back and sample with video whether you were having a full fare
Correct.
collection. Okay, wouldn't that be kind of a normal practice, just to make sure?
Well, you have a union contract involved that we have to abide by the contract and agreement that we can only do it based upon suspicion.
Oh, okay. And not for general revenue auditing purposes? Okay, okay. But literally, you are taking what you receive and you're dividing that by the fare and you're saying that's how many passengers we had that day.
No, we're taking the cash and dividing by what the fare box tells us was received, that came on the bus, and looking at the average fares. We look at the different media types that we have to ensure what we think we're getting.
But all these passenger count totals are backed out of the fare box.
They come out of the fare box.
Fare box, without any independent way of just noticing how many bodies got on and how many bodies got off.
No, but there is, one of the things that the Metro Internal Audit did bring up as a recommendation was the automatic passenger counters.
Right.
Which we utilize. We can use those on a test basis, but they're not as accurate because if the driver in a break or whoever is getting on and off at the same, it's gonna be more than what is actually the ridership. But we can use that for reasonableness.
Okay, but you were recommending that some approach like this is a useful thing going forward? Okay, but literally, there is no independent count. You're just taking the full adult fares and you're dividing what you got out of the fare box by some number, and then you're sort of estimating how many people we must have carried that day.
Well, no, actually, the fare box counts every single person that gets on via the fare that they pay, either cash or media type. And we take that number and compare that to the revenues collected to see, especially on cash fares, to see if it's $1.70 or somewhere close. But with the free transfers, it'll be less than that now. But we do monthly analysis on that, yes.
Okay, and that's why you're able to say that 100% of the $800,000 revenue decline is from not collecting the double.
Correct. We did an analysis beforehand, and we look at it every month to see what the differential is to make sure that we're tracking out properly.
Okay, and so how many riders is that number in either the 7.6 million or the 6.4 million in full adult fares?
Let me see which number you're talking about.
Well,
Councilman.
you're saying it's the same number of riders, they don't have to pay as much because they're not
Correct.
buying that second seat. So what is that total number of riders?
I don't have that on me.
I think it was approximately 9 million riders.
No, I mean,
We have 9 million riders a year, but
rides.
he's asking about how many are the free transfers.
Oh, okay, gotcha.
Yeah, but that's 9 million total rides
Correct.
in the year. Okay,
Correct.
all right.
Would
Well,
you like me to get that back to you?
if you don't mind, I know I will be asked sometime in the next 3 weeks.
Absolutely.
And I'm just taking advantage of being here in the committee to get all the information.
Absolutely.
Okay, thank
I will
you.
get that to you.
Appreciate it.
Any other questions?
I have a question.
Okay.
When you have these contracts, like with the state or Vanderbilt or whatever to provide rides for their employees, which line is that showing up in? Contracted services, bus?
No, those would still show up in the full adult fare, in the full fare category. The
Okay.
contract services are services we provide to RTA for the regional transportation.
Okay. So within that full adult fare, you can isolate which ones are for those contracts that you have?
Absolutely, yes.
Like with Metro, for Metro employees and for,
Correct.
and how many institutions do you have today?
Probably in the neighborhood of the three largest, obviously, are the state, Vanderbilt, and Metro. And then from there, it tapers off quite rapidly with Belmont, TSU, things like that. Probably in the neighborhood of 18 to 20, I would say.
So you just send them a head count and
send them a head count,
you've got a
they
fee?
We send them an invoice every month.
When we looked at the state Easy Ride contract, I don't think I mentioned that, but we did look at that through our own.
Okay.
Thank you. Thank you.
Thank you.
The next audit we have on the agenda is the audit of development incentives managed by the Metropolitan Development and Housing Agency, and we had Ted Cuba, who's going to discuss that.
Thank you. That's a little bit of a word salad there, but good evening. Appreciate everybody being here. So as Mark said, I'm Ted, and I'm the auditor in charge of this audit of the development incentives managed by MDHA, just to kind of shorten that a little bit. And I'm also joined here by Mr. Jim Harbison, who's the director of MDHA, as I'm sure most of you all know. So the scope of this audit was really to take a high-level look at MDHA's policies and controls governing their use of development incentives broadly. And so that really begins with the development district creation, the awarding process, through the construction monitoring, and ultimately through the repayment of the TIF loans themselves. So really kind of start to finish is the goal. And it's within the past 10 years has been kind of the time frame of this scope. So what we did not do in the scope of this audit is we really didn't focus so much on the Section 8 activities that MDHA is involved with a lot, in particular the pilots or payment in lieu of taxes. There were a number of reasons, but part of it was just a matter of focusing resources where there's maybe less oversight than as opposed to pilots, which are pretty heavily regulated. So the objective questions associated with MDHA's incentivized development are 4 of them. The first one is, do MDHA's controls protect the public's interest? Basically, are the taxes well spent, in a nutshell? Are the public meaningfully informed of the costs, benefits, and utilities of the activities related to incentivized development? And for that, we had generally no. I'm sorry, for the first one, we had generally yes was the answer that we arrived at, that MDHA's controls do protect the public's interest. For the third one, is MDHA holding both itself and developers accountable for achieving the agreed upon outcomes? Or basically, did we get what we paid for? And for that, we had generally yes. And then the final objective question is MDHA in compliance with applicable laws and ordinances that we're aware of? And the 2 in particular are TCA 1320-201 and Metro Ordinance BL 2016-157. Our answer for that, it was a unqualified yes, so just yes for that. We had several observations in this audit. I think probably 8 or 9 may have made it to the final report, but really they can be summed up into 3 main categories just to kind of help with it. So they involve the benefits of development subsidies, the cost of development subsidies, and grouping monitoring and disclosure activities together. So really, we tried to look at this from a cost-benefit approach and then include disclosure and monitoring in with that. So similarly, we had several recommendations, probably a dozen, give or take, but they follow the same framework of cost benefits. So the recommendations revolved around essentially seeking to quantify or measure goals / benefits. So what are we hoping to achieve, and can we actually measure it? And that's a lot of these are they're easier in theory than they are in practice. So I mean that one is a little bit challenging, but that's nonetheless what we're seeking to do. So for example, during development district creation or during a development agreement, does MDHA have defined quantifiable goals with which we could look back at a later date and say, yes, this money achieved this outcome, that was basically upon which it was sold or that we expected to get. So the second one, likewise, is determine and measure the costs. So the idea here for a few of the recommendations that relate to this are, what's the total incentive value related to each individual development project? So again, the focus of this one was basically mostly tax increment financing Also, things like discounted land sales. And then we didn't dive too deep into it, but the idea is with these recommendations, even to include things possibly like site prep, utilities, the value that the developer receives, essentially is what we're going at for that and measuring the costs. And then likewise, just, how are we doing on monitoring and disclosure? Can we communicate the costs and the benefits, openly and accurately? So that's pretty much it in a nutshell. Again, are there any questions I can step aside, and Jim can probably answer a lot of them better than I can, but yes, sir.
As I was looking through the observations, I guess one that kind of jumped out was observation E, and it talks about that there's not a requirement to get source not competitive quotes from multiple lenders,
Yes, sir.
and there's a lack of competition among lenders.
Yes, sir.
And I don't know if that's major or not, but I do notice that a recommendation was have a minimum of 3 going forward.
Yes, sir. Yeah. So likewise, I don't know if it was a major issue or not, but it just stood out as well. So we did make the recommendation, and they did accept that recommendation. Yes, sir. Yeah, and I should actually back up a little bit and say so for the scope of our audit, a lot of things that we recommend were based on observations that we made on projects that were either complete or started several years ago. A lot of these observations and thus the recommendations are already being and had already been, to a degree incorporated, in particular to the transit related. So I mean that a lot of you'll see in the MBHA's responses to the recommendations, they say, hey, we're doing this, or we have this in process right now. That's really best case scenario from my point of view, but that explains that. Yes, sir.
Tanya, you were.
No, go ahead. I was going to ask you that question before because I saw these complete and it said that it was currently being done. What you're saying there is that your recommendation really is a best practice recommendation, and you found that they had processes or things in place to meet that stated goal. It's typically in a recommendation, it's because something's not being done.
Well, correct. So some of the projects we looked at had already incorporated some of these things, such as detailed financial analysis, basically but-for analysis, gap analysis, or internal rate of return. Several of the ones that we looked at, kind of in the Rutledge Hill area, were a little bit different in that they were RFPs. They weren't the normal process. And so they may not have had the same followed the same processes, or maybe they were just older and didn't have that. So I think that's probably the best way I can answer it. Is not all where I made the observation. It meant that from my point of view, I didn't see that it was consistently being done.
Okay.
But so in some of the cases going forward, in particular from about 2014 on, they seem to really have made, I mean, they were already going in this direction from what I can tell, which, again, that's kind of best case scenario for me. If that answers your question.
That was going to be my question.
Yeah. If you have any particular observation.
Thank you, and I want to thank Jim for being here, because I'm just going to go through a little bit of history, and I think it's important to know you are a wonderful director. Came in 14. In 14, okay. So some of this comes to pre-2014, so just everybody, we understand that. So Ted, if you were to take the history of the TIF program in Nashville, which adds up, because kind of what I was hoping one of the yields out of this would be is you have TIF, you're doing TIF for specific public benefits. So what were the benefits, the attributable benefits that you purchased with the TIF money, so to speak? So now there are a lot of great public benefits that over time have been mentioned, and some that have not worked out maybe as well. Green space, for example, or sidewalks. So to me, it would be very interesting to know where the money ended up towards what benefits. Now, I have heard that a lot of the money just went to the landlord over the life of the program, Well, that's an interesting thing to go ahead and acknowledge. Again, we're in a environment where a lot of this happened prior to 2014 and 2015. So it's not talking about the current management of MDHA, which I know is working very hard to work with the public. But in the overall audit of the program, again, to me, how many loans were there? What were the public benefits being purchased with these loans? And then sort of how did we do? You know, how much green space or sidewalk or infrastructure or bridge or something was there, and then how much simply went to the landlord, right? And that I think that ends up being part of that. Now, you've been working hard at this, and again, with the Director Harbison here, is that possible to do? Because I notice in observation B that a lot of the materials, the financial analyses, are maybe not there or missing, or they never were done. Let's see, let me go to observation B and my stack here. Records of both the financial analysis used to justify the incentives and internal review considerations are not always produced and or available, though the trend towards greater analysis thankfully has been done since 2015. Do we think it's possible to go back and kind of audit the yield of the program? Because, I mean, you look at the face amount of the capacity, and that's just under $500 million, so clearly it's been a meaningful effort by Metro to that. Is it possible to kind of put this back to benefits actually received on a public policy basis? Or is all that record, is there like nothing prior to 2014?
Is that a question more for me?
Either for either of you.
I guess I'll start and then he can correct me.
Okay.
The
I mean, that's an acceptable answer. It just doesn't exist, and that's useful for us to know.
Right. Well, let me answer it in a couple different ways. So for several of the projects, and in particular going forward from my perspective, So my goal with a lot of these recommendations is to establish a baseline, or if there already is one, then just to continue on, right? So some things, especially pre-2014, there maybe just was no baseline, but from the projects that I saw, a lot of them did have, clearly defined in the development agreements, typically say, hey, this is for land acquisition, right? Valued at X dollars, or this is for environmental damage remediation, like Rutledge Hill, for $250,000, Y dollars, right? Not always, though, and the ones where I didn't see that were, ones where I question it, and the reason why I put the observation in there. So, I mean, 505th and Church parking garage is one that Mr. Harbison and I spoke about, and, that's, from my perspective or my understanding, was more kind of a negotiation. You know that a lot more about this than I do. I'm not going to pretend. You guys both do, So I think it's a challenge. I think it can be done better, but again, I would let you
Well,
guys.
just part of it, is it possible to reallocate all this money into the public benefit buckets? Some of that is parking, some of this, I mean, it'd be very interesting, I think, in the current discussion of how much of it ever went to affordable housing, if any of it, that it is attributable to that. I'm relieved to know that there are specific numbers. Environmental remediation would be a bucket.
Oh,
So that you can sit there and look at this very large amount of money. Again, you probably, the capacity, I mean, I don't know if this has revolved over time, and I also don't know how many total TIF loans there've been in all the districts. I mean, are we talking about more than 200, or, it's a lot of paperwork, I understand.
We give you a report every year. I don't know them off the top of my head, so all of them are given you every year.
Okay.
And we've modified that report. We started on our own when I got there, and
Right.
then I can't remember which, it was either you or Mr. Mendez that asked for specific data in it that we now give you. We can do our best to modify it. Some of it for closed development agreements from the early 80s, I don't know. I mean, the development agreement is your baseline, and all of these have to go to the eligible uses. And you found no eligible uses are outside of state law, right?
Correct.
So we're in line with all that. But remember, it's for economic development. So decisions were made, most of those frankly before my watch.
Right.
That were purely economically related to jumpstart economic development in the community. So they would look on the assumption that would happen anyway, which is or is not a good assumption. To say that you were very forgiving in land purchase, for example, 15, 20 years ago in the Gulch, Maybe you were, I don't know. But look at the Gulch today. So I'm not sure how we'd evaluate that.
Well,
But
I
we
think
could do a little bit better. Well, of course, our report's due this month, so I'm not sure I can get
Right.
it in this month.
Well-
But we're just going to look at that for next year and try to get some type of allocation to what the benefits were for the ones we've done in the last, say, 10 years, something like that.
Well, again, part of it is to foot it back as to what were the specific public benefits purchased in effect with these tax dollars, these future tax dollars. And I mean, I want us to be able to, I mean, if economic development is a reduced price to the landlord, I mean, that's fine too, but what bucket do we put it in, so to speak?
That's something we've got noodle on. Remember, the purpose of a redevelopment district is to remediate economic blight. That's its goal. That's why it exists. We have to do an economic analysis. We have to hold public meetings to establishment. All of that was done prior to my watch for all the economic development districts. And I think the Gulch is a good, every building in the Gulch has TIF in it. A lot of it, at the time it was given, if you were the first guy in the Gulch, whoever that was, you probably were taking on some risk.
Well,
I'm not sure how you advertise that, but what I'll commit from here is next April, we'll take a look back 10 years, which I think is reasonable, and about half that's my watch, at the loans. And I know, at least since I've been there, we've got the underwriting criteria, and we've got the development agreements, we'll see if we can allocate.
well, just to focus this again, and then I'll move on. I know Mayor Purcell and Deputy Mayor Phillips both have been of the strong view that TIF money was used for affordable housing in the Gulch.
It was.
And that how much it was used and then ultimately the effectiveness of that use, I think then becomes really interesting to this community and the current set of discussions. And again, both of them are very clear about that, but how that worked and then it ends up becoming a whole separate question is what does that affordable housing TIF investment look like 10 years later? Has it burned off? Has it moved on? Is it still there? How many people did it end up helping?
Just would caution, and I'm sure there are lawyers who are really going to disagree with it, but our legal opinion has been for the economic redevelopment districts, we could not require affordable housing in exchange for the award of TIF. And we went over the last 3 years with Metro's help. We had the law changed to allow us to do that in the transportation-oriented redevelopment district, where we're going through the details now. We're probably, I'd say, 85 to 95% solution for the very first one, where we do require affordable housing. And if you receive TIF, unless something changes in our last few weeks of negotiation, if you receive TIF for residential construction, well, you were there today, 10% of those units have to be affordable. $10 million is set aside for affordable housing, and it's specifically defined. Our attorneys, and attorneys can disagree with each other, have told me consistently we could not require that in the economic development districts, the 12 that exist. So it was never on the table as a requirement, but there were some that did it and got some TIF for it voluntarily.
Okay, well, then that's part of the puzzle back to Mayor Purcell and Deputy Mayor Phillips, is how it would have
And there
worked.
are at least two examples I can think of there in the downtown area, both with Giantana, where he had a brief period of affordability, when it was a negotiated request or whatever, but there's no specific way for me to hold developers, and say you must do this in order to receive TIF. Now, there is going forward, though.
Prior to going forward,
Right,
okay.
and that's only in the transportation-oriented redevelopment districts, not in any future economic redevelopment districts. There is a distinction between the two. And chime in if you disagree, because I know we've been studying this a lot, but, and I think this first one, we got a pretty good chance to do something pretty good, pretty unique on it.
Well, again, and we can confer later. I think you're sitting on something very interesting as the community will be talking about a really large amount of Nashville being TIF eligible going forward, is the discussion of what have we learned from our past TIF experience?
Your point, yeah.
And did we end up getting the benefits that we perhaps thought we were buying? Now, if we were just buying economic development, then let's go ahead and say that. And that's not a bad thing. It's just, this was our goal, this is what we got, how did we do? You get what you're studying. G3, I noticed reject that recommendation. If you would just elaborate.
Is that for council review of TIF loans? Yeah, we're going to have a fundamental disagreement probably, but obviously, as we do redevelopment districts, the ordinance governs, and if we're required to do that, we will. But certainly me and my board, we talked about today in the development committee, we believe that's our role. And we underwrite, we approve. That's how it's been in place for a number of years. The program's in compliance with law. Sure, there are ways to get it better, but if it's not broke, don't fix it.
Well, are we talking about the difference between kind of a pool and then on a project by project, on a case-by-case basis? Is that,
Well, the
you want the
council
right to the
approves-
pool?
The council approves the entire redevelopment district and the TIF
Pool.
allocation. It sure does. I mean, that's
Right.
law. That already happens. And so I'm not saying that should change either, but once that allocation has been made, each individual agreement, as you know, like the pilots and others, come up, our board reviews it, our underwriters staff does it, we brief it in development committee, all these are public meetings. We then take it to the Board of Commissioners, there's a discussion, the person receiving the TIF stands up and says his piece and defends it, and then we approve or disapprove.
Well, I know both in Charlotte and Atlanta, they do it on a case-by-case basis and not in a pool, and have been quite surprised that we have a pool approach here, maybe other cities do. I didn't know if there's an identifiable best practice in this. Where do you even go to find a best practice in this? But I know definitively in Charlotte, I went there, that they were like, you can't do a pool, but then we do a lot of things, I'm sure, differently than in other places. They don't have an MDHA either. They have a development agency and then they have a housing agency. But going to your reject statement, the essence of a redevelopment district is to create a plan to eliminate deleterious uses. That is true, but isn't the reverse true, that it's also to create public benefit? And that's
Well,
why
again, I-
identifying public benefits.
The statute's written for economic development. It's an economic development tool. You can gain public benefit from it, but the purpose of a redevelopment district is to remediate economic blight.
Okay.
And it's, quote from the statute, that's the advice we get from our attorneys. That's certainly direction my board's in now on these economic redevelopment districts. Now, that's different for the transportation-oriented. Obviously, that is oriented, providing infrastructure and supported transportation with the ability to include affordable housing as a mandate if you desire.
Okay. Well, I don't know what our rules are. How do you handle a reject of one of the recommendations? How does the committee-
That's just, management's got that choice, they're accepting that risk. Our goal was to say there could be another threshold for large, significant projects to have an extra set of eyes review. Their position is that we accept that risk, we believe we've been delegated that authority to do this mission, and that's where it ends.
This is not the law committee.
That's okay. All right, so that's
We
up to,
observe and document.
that's up to the department head to reject. And one final thing, I know there are other questions. On the valuation of property, do you have a standard practice for appraisals?
Is this C1?
Well, this is more, several times it's mentioned the
Right, so-
transparency of the valuation
Yeah,
of
we
properties.
agreed that we've got to work a lot better at how we establish that market value and
Okay.
advertise it. So we do have a practice. It probably could use improvement. We've got to study it. So, but we do have an existing one. We cite those values as they pass through our hands in the title transfer.
Okay.
In some of those, we do a third-party appraisal if there's a question on the value. Some are easy. If it's a nonprofit that owns the land, it's a zero value. We don't need to, because it's a nonprofit for tax value. But we've got to look at that in a more systematic way. So I agree with that, and we're going to work on it.
Well, I appreciate that. Metro Surplus Property Division, which works for Talia here, I have to say are pretty expert and a resource in that, and
You
also.
have to charge us?
Sure.
As long as it's pro bono, I love it.
Well,
Charge us for everything.
and that's a little bit part of transparency too, just
Yeah.
by having, then they can go, well, this is very useful
Right.
to us.
And they're working a lot more closely with us than we did 4 years ago when I got there. So that's a great discussion. Happy to take that on and open the door of Talia and see if we can take advantage of their skill set. That'd be great.
Okay, thank you. And again, I want to acknowledge an enormous change since this director has been here, also director, in terms of what has historically been the least transparent agency in metro government. I think that's not an unfair characterization. Part of it out of necessity, perhaps, but to move that into a different space is very valuable, I think, for the community. Again,
I have
I
a
don't
discrete
know if you
question. On G3, that recommendation, is there a standard or basis? What did you guys get that was the best practice or the standard?
It was arbitrary.
We're just looking at from an internal control saying that there's questions about these large projects, how, what was going on in the extremes. We just said the 5 million was just an arbitrary number, saying that's something to work together to say it might be a good idea to have an extra set of eyes from a sense of transparency on the really significant individual projects.
All right, so you guys proposed a recommendation based on feedback you heard through the process about, I guess, what was the feedback that led to the recommendation?
So what led to the recommendation, and again, like Mark said, kind of an arbitrary number, and the idea was generate discussion, and we knew they were going to reject. They told us they were going to reject it, so I mean, that's fine. There were no surprises there. But looking at and talking with several council members, particularly on the planning committee, the idea or the thinking, and again, this is anecdotal, but is that on kind of the smaller projects, there didn't really seem to be a lot of questions. You know, people seem to think, hey, this is pretty clear-cut environmental remediation of X amount of dollars, TIF amount for Y dollars. But most of the questions or most of maybe the emotions were to larger developments involving TIF. So when you start getting above a couple $100,000, $1 million, the counterpoint, which both Mr. Joe Kane and Mr. Harbison communicated to me is, and which
I'm not to cut you off, but I know we've been talking about a while, and I understand their counterpoint. I'm just trying to figure out what drove you guys to.
that was it, just anecdotal feedback saying, hey, we're not that worried about these. These seem to function well. There weren't a lot of questions about the smaller projects, and my analysis didn't really show. The one that I had the most questions on was 50, Fifth and Church parking garage. The other ones were smaller. It was pretty cut and dried.
Okay.
This is the TIF request. This is the TIF amount. Here's the justification. And it seemed to be pretty clear.
Thank you.
Yes, sir.
Anything else? I do have one question. The new transit redevelopment out, I guess, is that Donaldson?
Yes, sir.
What's the magnitude of, I guess you call it capacity, what's the dollar amount of that?
$30 million in TIF is in the plan that we have under review that the board approved today.
And that's pretty much the station, and it kind of runs up and down Lebanon Road. And
It does. It runs about halfway to Briley Parkway and then up. It's a selection of the UDO, of the
Okay.
existing UDO.
And how much affordable housing units?
Well, $10 million is the minimum amount to be set aside to build affordable housing, defined as 60% of the
Okay.
area median income and below. We won't know for sure till we get into underwriting with the first developer and how many units that is. I think it's been a fair point that this is our first one out of the box, but there's been a lot of discussion about setting specific unit goals for an area based on a survey before you got into the public discussions. We've gone through, I think, 11 public meetings within the process, and moving forward, I think that's one of the things we need to do is not just set a goal for dollar figures.
units.
We need to sort of try to get a target for units as well. And I just say in a caution, this is a transportation district, it's not an affordable housing district.
Yes,
So-
I just heard you mention that.
So, but it has become the focus of this redevelopment district, I think, more so than the other part of it, so.
Well, congratulations, I hope it works out.
We're pretty close. I mean, I'm working very close with Mr. Mendez, and, we're figuring out what goes in the ordinance and what goes into the plan. But the board approved, the key points from our board today, which reinforced me very heavily, define the affordable housing as 60% area median income and below, and this is for affordable housing. $10 million minimum amount of money to go towards affordable housing. And if you receive TIF for residential construction, 10% of your apartments must be affordable on that 60% AMI metric.
Okay.
So that's kind of our policy. It's pretty bedrock policy for our board, and with the rest of it, they give me pretty good discretion of how we do the wording to make sure we get there. So.
Good, congratulations. Okay, Mark, you might want to pick and choose agenda items based upon?
Yeah, well, let's go, we have Office of Family Safety, I think will help. And Laura,
I know we do have some action items on here, don't we?
I don't know if we have any, well, we have one,
Audit,
yeah.
the audit.
Yeah, we got one.
Thank you.
Okay, so the Office of Family Safety Audit starts on page 24 of your workbooks. We are joined by Andrew Sullivan. He is the finance officer for the department. So this was a compliance audit. The department started in July of 2015, so our scope kind of covered from when it started through September of 2017. And we just looked at the compliance with departmental and government-wide policies regarding payroll, purchasing, credit cards, travel, donations. We did not do a detailed grant review, but we did look at grant expenses just to ensure that they were allowable per the agreement. We checked to make sure they were, the required reports were being completed. But we did not find any problems with the grants. But we did have 3 observations. The first one, no employee leave time documentation was kept for fiscal year 2016. For the documentation that they did have in 2017 and on, it didn't always match the leave record due to either missing documentation or just documentation that was never entered into the record. So employee leave balances couldn't be confirmed. And then the department leave policy states that leave time should be accrued monthly and for months where the employee was in a paid status. Their current process is to make all leave time for the year available at the start of the fiscal year. 5 employees took unpaid leave during the audit period and did not have their balances adjusted for those months. The second observation was that there's no controls or written policies and procedures for the collection and handling of donations. Those donations make up less than 1% of the department's revenue, but we did recommend implementing some policies and procedures for collecting and handling those. And then the third observation was there was minimal credit card documentation available prior to July 2016. We looked at 14 credit card transactions during that year, and 10 of them did not have receipts. So, but a credit card review was done by the Office of Financial Accountability that covered that period, and they found no instances of non-compliance. But I will add that in fiscal year 2017, the office hired Andrew as full-time finance officer. So most of the documentation retention issues that we found were prior to having Andrew on board. So that definitely improved the retention of documentation. We made 6 recommendations. 5 of them were accepted fully. They couldn't accept or reject the recommendation to implement an electronic time-off tracking system until they do some more research to determine if there's an affordable option. So that's all I've got. Any questions?
Did you discuss in terms of the time system, using Metro's current system, Chronos?
Yeah, it's just due to how small the department is. I'll let you answer that.
Yeah, I mean, Chronos is expensive for us, and I know I used it when I was in the finance department. I don't know if it would probably solve all of our problems, but I don't know if it's feasible because our below-the-line budget is $60,000, and so for us being that small, Chronos, I don't know if it's worth the amount of money for us.
You wouldn't really actually have to pay for Chronos. You would just have to you just have to work with the department to implement, correct, Phil?
Right.
So there's really not a cost to the department. So I would encourage you to to look
taking
into
new
that, because that's a
customers?
product that's already out there.
The last time we talked about that with someone and we got from finance that they weren't taking any new customers from
Right,
Chronos.
but it may be a timing issue because of R12 and everything. But I'm just saying, I don't want you to believe that that's a cost that would have to be incurred by the department in terms of implementing that, an additional cost. And then in terms of the donations, did you look at that in terms of the existing donations policy? Because there is a policy
Yeah.
around tracking donations.
Yeah, we did look at that. I guess I should say that there's no written procedures in place. So when they collect donations, there's really nothing that they have written for their employees as how to do it.
Were they following the donation policy?
I guess not. I'm trying to remember off the top of my
I think
head.
we were saying there were things given to the advocacy center that wasn't always
maybe,
Forwarded to the right for the
if they're
report.
supposed to produce that annual report on donations.
Yeah, they do that,
They
so
did that,
that's.
but it just didn't necessarily have everything on the report.
Okay.
Thank you.
I just want to ask a little bit more about both those things. You know, there's, on the donations, I mean, I would strongly suggest figuring out how to do it more robustly. You know, just because everybody involved in the department right now is A+. You know, we got some examples around Metro of if it's not everybody A+, donations can get into a very bad spot. And so building the processes and controls, I think, is really critically important. And I would like to ask if y'all could change the corrective action plan to accept, subject to finance being able to take you guys on in Kronos.
Right.
What do you, I mean,
That's why we can change it. I'll talk to Diane
But then it
tomorrow
would just
about
be
it,
a
but
timing
we can-
issue.
Yeah,
yeah.
we can look into it.
I mean, I would like to formally ask you guys to change the corrective action plan to accept it, subject to Metro taking you on. I don't think it's acceptable to just not do it. So you'll get back to the audit committee, so I can get Mr. Swan and he'll let
I'll
us.
follow up with
Yes.
that. Okay.
Thanks.
Okay, thank you.
Thank you.
All right.
If we do have some action items, like a change in the audit plan, do we know, I never know when I'm gonna lose anybody.
Oh, okay.
Then we turn it over to the outside auditor.
I think get the outside auditors, and then we'll go to the one action item after that. Because that might take a
Your
little
action
while. I
item.
hate, you know, well,
We up?
You're up.
Right.
We're anticipating a very concise.
Yes, very.
See what we can do.
All right, we've got two items. One is the management letter that we produced from the outcome of the audit and the items that we brought to management's attention that related to internal controls and observations that we made relating to processes and procedures as they surround the accounting function. I will tell you, we did not have any material weaknesses in internal control that we reported. Material weakness would be a deficiency or a group of deficiencies that created a situation where it was reasonably possible that a material misstatement in the financials would not be prevented or at least detected in a timely manner. Now, keep in mind, you know, materiality of the financial statements is a pretty good sized number. So you'd have a situation that would not be detected, you know, it would probably be need to be a pretty serious internal control deficiency or fault. We did not note any of those instances. We also did not report any significant deficiencies, which is a little less severe situation, but it is something that we would bring to your attention that needed to be corrected. Everything that we have in this management letter are just observations and recommendations for improvement in the system and items that would not rise to the level of either a significant deficiency or a material weakness, because they would be detected, we believe that they would be detected in time before they became material to the financials. So with that, I'm going to cover all the items in here. The first item, and some of these are repeats, and then some of them are new, but the first item, timely preparation of bank reconciliations. In our audit process, we select samples of bank recs from various departments and groups, and then we test those for timeliness, for propriety, you know, all kinds of things within the bank rec testing. But we did notice that there were three groups of reconciliations that were not done really in a manner that is timely, and what we would consider timely would be within 45 days of month end. But the operation and concentration account is one of those. Now, that's the group account, the single largest account within Metro. Then the trustee deposit lockbox, and water and sewer customer refunds, and MNPS lunchroom checking accounts. We're not all done on a timely basis. This is a repeat item, and I will say things have improved. The average in 2016 for these accounts, as far as number of days past year, month end, before the reconciliation was prepared, was 101. As of last year, it was reduced down to 79. So that was a significant improvement, but we'd like it to see it get to 45, obviously.
Is that primarily because of understaffing, or is it technology?
It's a number of things, and I think that management's recommendation has adequately kind of identified what some of those things are. Obviously, our recommendation is that it should be prepared on a timely basis, each month, and within 45 days of month end. Management, their response, there were certain times of the year, depending on, the staffing and conflicting projects that have to be done by, people who are in the reconciliation process, they have to do something else, that type of thing adds to some of it. But they've tried to address this in a number of ways. I think the most important way is the cross-training. Because I believe then, if staff gets pulled off that is used to, normally does the reconciliation process, there's someone else who has the ability and the training to prepare the rec in that person's place. So I think that'll be the biggest, at least in my opinion, the biggest help. But also they've reassigned some staff to dedicate the resources necessary to get it done on more of a timely basis. And basically, all three groups have responded in a similar manner. I mean, personnel, MNPS, they've changed in personnel due to retirement. We've never had this item from MNPS before, so I do believe that was, in fact, the reason for that we noted the untimeliness in 17, where we haven't in the previous years. And then water and sewer, again, they've reduced it as well, but they're not quite within the 45 days, but they have, have agreed that with the recommendation that they'll continue that process to reduce those days. Review of bank reconciliations is the next item. Again, in a similar vein, but we noted that within the trustee's office that there were very few indications that bank recs, after being prepared, were reviewed by a second party. And obviously, that's an important control that needs to be in place, and that was our recommendation. Again, personnel issues, they transitioned in staff during the year, and reviews were delayed. So I think they're committed to try to improve the situation, but on a yearly basis, that's been a recurring theme with the trustee's office, is that they've had a lot of turnover. And so continuity is an important thing, to be able to get this done and accomplished and these reviews made. Old outstanding items on bank recs, water and sewer refunds, and trustee deposit lockbox. Those items should be either written off or identified and settled. They're not material, but they are items that need to be dealt with in the reconciliation process. Water and sewer has said that that they're committed to do that, but there's some additional research that needs to be done on certain of those items to be able to identify what they are, and then based on that, then they can deal with the resolution of those things. And then they've had some personnel issues as well, as far as reassignment of staff. So a lot of these are, Charles, they're staffing issues. But again, we're trying to stress the importance to all these departments, of the bank reconciliation process and the timeliness, that's important to the timeliness. Next page, page 5, timely recording of cash receipts. There were certain, within the trustee's office, there were receipt batches that were not recorded in the general ledger for a number of days. Now, they were properly deposited timely, okay, so they got in the bank, but then those batches of receipts were not posted to the GL for some period of time. And 71 days is way too long. And so that's an item that obviously needs to be corrected and changed. And that was our recommendation. Their response, seasonal workload, contributing factor. I still don't think that that's a valid reason for not getting things properly recorded on a timely basis in the GL. But they have, here in their response, agreed to work toward the consistency of that, getting that recorded timely. And then they also said a factor last year was getting accurate information from the new tax accounting software. But I think a lot of those bugs have been worked out, and so hopefully that will improve the situation there. But that'll be something definitely that we monitor again to make sure that that is improved, because that's a necessity from our standpoint, our viewpoint.
How do they reconcile? I guess they don't reconcile the accounts, so they input the receipts?
Yeah, I mean, not on a timely basis, they can't, until they get all that information in the system, so. And that's part of our issue with it,
Right. So,
And part of that was the implementation of their new
Yeah,
tax
and that-
accounting software, right?
Right, yeah, and they say that in their
Yeah,
response,
'cause they
so.
were implementing, and they started that when, maybe a year and a half ago.
It's been live a couple of years.
Yeah.
Yeah.
But they've had a few kinks to work
He
through.
had some
into
kinks.
may I make a request? When you guys start the work on the audit, can you have somebody take a spin by that?
Yeah, we'll look at that early on, yeah, and we
Let
will.
us know.
Yeah, in our testing part of our audit early on, we'll look at that. So we can get back with you on that pretty quickly.
Thank you.
Once it starts. Segregation of duties on the next page for MMPS. At the district office, we noted that there was a lack of segregation regarding cash receipts that came into the district office. It was a single employee handling checks, and that employee also wrote receipts, stamped a deposit, created a deposit slip, made the deposits. And then a second.
You're efficient.
Efficient, but no controls whatsoever. So, and then a secondary employee that records the receipts did not reconcile the receipts to the deposit slip. So a number of issues there, obviously. Again, not enough money.
Yeah, what was the cash receipts for?
I don't know offhand. We've got it in our papers. I can find out. But I mean, it would not be material to the financials, obviously. But still, obviously, any handling of cash or money, you need to make sure that the controls are there so that the opportunity for error and/or impropriety, is eliminated. So. Obviously, these duties should be segregated between multiple employees, or compensating control should be put in place. So their response, they have made changes. A second employee now reconciles receipts, deposit slips, and postings to the journals. The employee has no access to cash or checks at any time. A second lockbox has been purchased to store cash and checks, not deposited within 3 days. The only employee making the deposits has the key. So. They have put in procedures to assist in some of that. Again, this is another item that we'll look at early on in our cycle testing, or our transaction cycle testing. So we'll address this quickly. Make sure that those improvements are in fact in place. Recording of capital assets. There were several capital assets that we noted that were not disposed of, whether they were being disposed of or placed in service, whether they were being purchased or acquired, on a timely basis, and that those items were actually recorded kind of in the process at year end, as opposed to as they were either purchased or disposed of. And some of this was miscommunication between the departments that had these and the financial operations department. Also, in the financial operations department, the employee that did a lot of capital asset retirement or retired during July of 16, so at the beginning of the year, and those tasks were transitioned to other employees, and so part of that was a transition, a change of personnel, but they have committed to make sure that that communication improved between those certain departments that were not getting the information to the accounting staff and the central government on a timely basis, made sure that communication was improved. And then they've made some staff changes that will make sure that they're recorded timely. And then the last one is one that is also, has been recurring, and this is the roads conditions. And we talked about this quite a few times and over the past couple of years. Again, the observation is in here because we need to get back to the level of at least 70% and be able to maintain the modified process for accounting for your capital assets or your infrastructure. And bridges are fine, but roads have dipped below that. They dipped below that initially after the 2010 flood for obvious reasons, but then the improvement has been slow. They have continued to improve. I mean, I've got the stats for 15, 16, and 17 here. 15, it was at 60.5%. 16, it improved to 66.2, and then 17, this past year, it improved again to 67.2. So it's getting close to 70%, but we still have a few points, about 2.5 points to get to that level. So we'll see again if the improvement will be such that it reaches the 70% in 18. So we'll monitor that. Doesn't necessarily feel like it when you're driving. No, I'm not sure they put the machine on the right roads. I told Joe, I said, if they put it on 440.
It's staying.
But, you also see a lot of improvement in different, I know that stretch in front of the stadium there, there's been some vast improvement there. And so, a number of the roads around town have improved, and then the secondary roads as well.
When do you think we get to 70?
I don't know.
Hopefully in 18.
I think they've got some resources available to them today.
It's kind of ironic now that the biggest complainer about this issue is kind of in charge of it now.
Yeah. Yeah, we actually had a conversation about that last week.
That's the management letter. John's going to present the booklet, the schedule of federal expenditures and the related letters to those.
So if you go to the table of contents, I'm going to try to take this book and boil it down to 3 or 4 pages. But I welcome any questions. Having said that, the table of contents, so we have 2 opinions in here. We have our independent auditor's report on internal control over financial reporting compliance. This letter is our Yellow Book audit. This is our government auditing standard letter. It's dated October 31 because we had reviewed these controls to determine our substantive procedures in our audit that was issued and dated October 31.
And I will add to that, if we'd have had material weaknesses or significant deficiencies, they would have to be reported in this letter as well.
That's right.
But that's the only thing that's reported in this letter, just management letter comments are not. So I just wanted to clarify what the difference between these 2 letters are.
The second one on pages 3 through 6 is our independent auditor's report on compliance for each major program and on internal control over the compliance. Now that's dual dated because the compliance and internal control over compliance piece is dated March 16th because obviously we hadn't completed the compliance part, the federal compliance part of that until March. But we had reviewed those controls and we had audited those numbers in order to issue the CAFR in October. So it's dual dated. Pages 7 through 26, you're going to see all the expenditures, federal and state, that were subject to audit. Now, if you turn to page 27, this kind of sums up our whole single audit. On the top of page 7, we have an unmodified opinion for the financial statements. Internal control over financial reporting, this is what David was getting into. No material weaknesses, no significant deficiencies, no non-compliance, material non-compliance. If there were material weaknesses or deficiencies, they would be in here. On the federal war, it's the same thing. No material weakness, no significant deficiency, and our audit opinion is unmodified. On page 28, we list which major programs were subject to audit. the child nutrition cluster and the WIOA cluster. Those are clustered together. They're different. The first one has 3 different CFDA numbers, and the second one has 3, but they're clustered into one major program. And then the other program were the WIC and the Head Start. The dollar threshold for determining the type A and B was $3 million. So overall, of the $175 million federal dollars, we audited about $73 million if you add these major programs up. The biggest being the child nutrition, which was about $50 million.
Before you turn that page, John?
Sure.
The last line there about whether they're qualified as a low-risk auditee.
Right.
Can you remind us of what the factors
So-
are, why we're not?
There's many, but the main one that's relevant here is you cannot have a material weakness within the last 3 years and be considered low risk. So I don't think, did we have any last year?
No, so.
And we don't have any this year.
Hospital.
Did we have one for general? We did.
I'm sorry, 'cause
General
the-
hospital.
yeah, General Hospital has material
Yeah, I
weaknesses.
thought it was.
For a while, it was the constitutional offices that were hanging us up. And now it's,
Yeah, the going
Yeah.
concern related to
Right.
the hospital is also
And
an
that's the
issue
other-
as well, so.
that's another one.
That's the only thing.
And
Yeah,
that-
it has nothing to do with the central government, it's all related to General Hospital, but
Yes.
since it's a component unit, it's. yeah.
So just because we televise these things now and they get recorded, I just want to make sure that the answer, as I understood it, is that we're not a low-risk auditee because of the going concern issue with the hospital. And what I'm hearing you guys say is, and the material weaknesses from the hospital, and there's no other reasons other than that.
No.
And that's a cost issue for what it costs to do the audit, because you guys have to audit more of the federal programs.
What's the
As
percentage
a,
change?
as a high-risk
40 versus 20.
auditee, it's 40, yeah.
Say it again,
20%.
40 versus 20%.
Yeah. So 40% would have been, well, 175, about 70 million. We audited 73 million, just the way the clusters fell out, but.
And 20%.
20% would be 35 million, so we'd have to audit 70.
Sorry for interrupting.
No, that's
If you don't mind just pulling at the thread that Bob started here for a second. The going concern problem at the hospital is that we've not been giving them enough money and it's required a supplemental, because then you can't guarantee that it's annual operation.
I'm going to play lawyer for you guys. Objection.
No.
I know, I'm leading.
I think that's a matter of
But
opinion,
that's-
whether you've given them.
But that's why you have the going concern, is that technically it's running out of money before the year end.
Yeah,
Right.
we
Okay.
cannot establish that they could survive
Right.
without a guarantee from Metro of a certain amount that they would make it for another year, and that's the minimum.
And it's
threshold.
also the timing of the approval of the
The
council.
timing of the approval, that this half-year supplemental
Yeah.
really creates the going concern problem, okay? Just, we have the chairman of the Hospital Strategic Planning Committee here.
Making a record, or there's questions about stewardship, and I think the only thing these guys are saying is they can't be sure that it continues into the next year.
Right.
Exactly.
That's what I'm saying. It was a
Under
matter
the
of
current
opinion on
system,
whether money
absolutely.
is just-
Right.
yeah.
Okay,
Yeah.
thank you.
Thank you. Any other questions on the booklet?
I'm sorry, I was just letting Shannon record, I can't stop. Okay, we got a couple action items. so-
Okay. Are the,
Oh, just a second.
we're doing, okay.
There's one question I wanted to ask those guys.
Yeah, I was gonna say while they're here.
If I may, the question about whether the allegations in connection with the mayor change the work that you guys have to do.
Yeah.
Can you tell us about that?
Well, I mean, we're going to be required, there's several requirements. One from the state, whenever anything's reported to the state relating to any impropriety or potential fraud or, a shortage or whatever, then we have to look into it as well. And I don't know that that means we have to do any kind of separate, big, long-term investigation, but I know internal audit is, so obviously we'll have to review their work papers and their findings, and then based on what we find there, decide whether we need to expand anything from that or whether that's satisfactory and meets what we need to do to report to the state. based on, what we did and what we found.
And then other than it being,
And if the TBI would, I doubt that they'll allow us to look at their stuff.
We will ask.
But we'll ask.
and other than it being higher profile than usual, what you described of looking at the internal audit's work papers and
Right.
doing a review, that's a thing you guys are used to and have
Yeah,
worked
yeah,
together
yeah.
before on.
We review, we read and review every report that internal audit puts out each year. Now, we don't review all the work papers related to this, but this we will have to, just so we can make an adequate
And
review.
usually if it's fraud related, we do.
Yeah, if it's
Dig a
fraud
little
related,
deeper.
yeah.
I mean, it saves us time from having to redo the entire investigation ourselves.
Just wanted to make sure I understood how that
Right.
division of labor was gonna work.
And your report goes to the controller's
Yes.
office, and
That's
you're
right.
doing it for the controller's office?
Yes.
Okay. With them as your client, in effect?
Well, they don't pay us, but they
But
require us
they're
to
the,
report.
It's a legal
the output,
requirement.
Yeah,
okay.
yeah, it's part of our contract to audit
What's the
with the state
threshold,
of
like
Tennessee.
$400?
There is no threshold.
$100?
25.
It's
Yeah.
I mean, if somebody calls in a $25 thing and the state is made aware of it, then, we receive a letter that we have to look into that. There
Anything
is no
involving
threshold, dollar
fraud
threshold.
takes
Yeah.
it up to the state level.
That's
Thank you.
exactly right.
Okay.
In this particular case, the publicity,
And usually-
we had an
yeah.
oral conversation with him to be resolved later.
Okay, thank you, guys. Appreciate your work. Mark?
All right, the next item, we did receive a request to look at some financial and budgeting communication issues with the the Metro Public School System School Board. That's on page 29 and 30. Circulated the request to you earlier. We have accepted the work and started working contingent upon your approval to revise the audit plan. The motion is if you would like to revise the internal audit 2018 internal audit work plan to include the engagement as detailed on page 29 and 30 of their request.
Do I have a motion?
So moved.
Second?
Is there a second? Okay,
Can I ask a question?
discussion?
So I know that Ms. Lomax and Neil forwarded you earlier today an email from Councilman Glover, and which is now being passed around. I didn't know if you wanted to see that.
Putting it in as evidence?
I'm gonna have to get help. And I haven't been paying enough attention to, what's in the scope that's already been requested compared to the conversations at the school board that he's referring to last night, to know whether it's something different or extra or the same things. And, I'm in favor of pursuing this, and my question/suggestion is figuring out whether the items that Councilman Glover is referring to is in addition to or the same issues, and I just don't know.
Okay, maybe I can try to address that, because we had conversations with Board Member Froh prior to this request, kind of simultaneously with that request, and there's one issue is to looking at consulting services and purchasing and contracting, and so what we had kind of taken our approach is that we would try to include her more specific concerns in this audit to see if there's any predication for any other issues, to see if there's predication for a deeper dive into a separate investigation on certain issues. And that was the approach that we were taking with this audit, which is really what I see similar here, because there is a request to look at the procurement practices, and some of those areas in this, especially on consultants. And so that was our approach, and then we actually had planned our division of work to have that kind of segregated out. If we need to split off and do a separate investigation, we would do that. That was the plan.
That all sounds very reasonable, and if you could communicate that to Councilman Glover, I would think he would appreciate it.
Isn't Councilman Glover's concern, again, I've not talked to him, but having seen some of the news articles, is MMPS spending on sort of unauthorized, that there's kind of this somewhat artificial distinction about what was bid and then what is separate. Didn't you send a letter out? Yeah.
Yeah,
on
you're
this.
probably talking about the UPRs, which is on the news, is the unauthorized purchasing requisitions, which is their method of self-policing themselves, saying, you know, we need to have a requisition for everything in a purchase order, but life happens and invoices show up to be paid and there's no purchase order to associate with it. And so then they're going back and getting a purchase order after the fact. Doesn't mean it's necessarily unauthorized. It's just not, it's unauthorized that it doesn't meet their standard. Now, most of these federal grants, they need to have that there, depending on who's paying for that money, is how serious that is. But when you look at overall, I've looked at what they've had, and just like you said in the news, it's less than 0.5% of the goods and services that are being purchased that are meeting that category.
But your view is that that concern is addressed in this authorization?
Well, it's part of, we're looking at, they had several things on revenue,
Okay.
comparing purchasing. We were kind of looking at that as saying,
Great.
going ahead and trying to include those concerns in here for predication purposes to see if we should do more.
I just wanted to confirm that you feel that that concern is embedded in this authorization.
Yeah, I will. I would
Okay.
say
Okay.
I would say we need to do some of that same work to address this audit request. And if there needs to be a separate investigation, I have the authority within our bylaws for me to go ahead and start that investigation. So,
Thank you.
Granted me that with the last council resolution, ordinance.
Any other discussion? We have a motion to amend the current audit plan.
Second.
All in favor? Any opposed? Okay, passes.
And then I'll jump to page 33. In the last, we had the motion for the, to assist to co-investigate the mayor's issue and the security detail with assisting the council special investigation committee. And so from that meeting, we did get an agreed upon procedure with the special committee, which is included here with us, specific procedures that we would perform. And at that time, the envision was that there'd be an additional council that a lot of this work would be handled to. I proposed a revised agreed upon procedure. Meeting was held last Thursday. And at that meeting with the special council committee, investigation committee, at that meeting, it was determined that they preferred not to accept the revised agreed upon procedure. They're proposing that they would have a recommendation, a recommended resolution to, if I remember this right, disband their efforts with a request that the audit committee continue on the work and then ensure that whatever report that comes from the internal audit office is copied to all members of the council. So I don't know what. So I guess my question is, if their request is approved at the next meeting, I guess it would be, would you like me to continue working on this as a separate investigation going forward, contingent upon what, if the council was to successfully pass their resolution?
Don't you think we have to, well, go ahead. You're probably more in the middle of this.
I mean, I think absolutely positively keep going, and I think Mark alluded to it, but just to underscore there was a strong message from the special committee that the right place for this, now that the former mayor has resigned, is the audit committee. And so my view is that there's important questions that haven't been answered, and that the internal audit function should go forward. Most specifically, regular citizens, even people in government, elected and not elected, have absolutely no idea what the mechanism of the acknowledged fraud, where there have been 2 plea bargains. Nobody has any idea what the mechanism is for that fraud, what controls are in place, were in place, aren't in place, should be added. And I think the the goal of the audit committee in a situation like this is to at least figure out and determine the mechanism of the fraud that's already been admitted and resulted into conditional guilty pleas. And unless, if we can't answer that question and tell the community why, what controls we're putting in place to make sure it doesn't happen again, then I feel like the audit function, internal audit function hasn't been met. So my view would be to go forward and view the couple-month side trip to the Metro Council on this as, I guess, unproductive, but carry on with the normal internal audit function that we would have done anyway. Just one person's opinion.
Two people's opinions.
Yeah, I think it's important to look at the controls, conflict of interest, and just to confirm ourselves that we're learning something from it and will be implemented, in other areas as well.
Can I just, this is just a comment more than anything, because I just want it disclosed that I serve on the pension committee of the benefit board that is considering how to go in and do an evaluation regarding the pension benefits for Sergeant Forrest. And in that committee, we will be discussing in terms of what types of data will be coming back for the pension committee to make its decision. And in our last meeting, we did discuss this being one of the tools or resources that would be available to that committee to evaluate that need. So I just wanted to
The tool being this audit.
the tool
here.
being this audit, being one of the things that would be available to the committees as we decide how to move forward, because the decision hasn't been made. So I agree.
Okay, do we have a motion?
It's valuable.
Because before, we were, in essence, giving professional staff to the special committee. So now it looks like it's a change of the audit plan.
Right.
May I ask one other question before we have a motion?
And the scope would be a question.
Yeah, it impacts scope. I know that the standard procedure is if legal advice is needed, which I think it will be in this situation, is to go to Metro Legal, and if they've got a conflict, or say they have a conflict, that outside counsel is obtained. And I've heard a informal, without having thought about it, answer from somebody in Metro Legal that they're that they could work on this. And I would like to express the opinion that people in Metro Legal were in real time witnesses to conversations about this stuff and providing statements to the media about this. And some of the available information is media reports that involve statements from Metro Legal. And I'm not questioning anybody in Metro Legal's ability to be independent on this. I am questioning whether the public perception would be that there's independence, and I would leave it to your professional discretion about outside counsel or Metro Legal, but I would offer the urging that I think the public is going to view the idea of using Metro Legal for legal advice on this as not fully independent. So,
With that, does anybody want to make a motion?
Well, just to clarify that, so in effect, what you're saying is, should the auditor, or internal auditor, feel the need for legal advice, that he use his consultant's budget?
well, I don't want to tell him how to do his job, and so I want to leave it to his professional discretion. Adding the observation that if it matters to professional standards and how to balance everything, the fact that the public might view it as less independent if Metro Legal provides the legal advice, that ought to be a consideration.
Okay.
But I think I trust Mr. Swan's judgment on this.
Okay.
So with that, I'll make a motion that we amend the audit plan to include a the scope you had already agreed to with the Metro Council, and, or I guess the scope you proposed to the special committee last week, which I don't know if it's not here, but,
I can summarize that.
Yeah,
Addition.
go ahead.
To summarize the additions, the additions that we had recommended were looking at standard of conduct and executive order and the Metro Code standard of conduct with this issue of the facts and circumstances, which is where we would probably have council give an affirmative opinion of whatever conclusion we drew. And additional, the only other item that was big is to determine what happened or what procedures might have been, the methods. You know, we believe that we'd have to do some testimonial evidence, have to interview individuals, and so we added, in the initial agreed upon procedure, it was there, that was specifically reserved for the council, and so we added that back, and so that's the only two big items. So,
Okay, and you're comfortable with that?
well, it's not my favorite thing, but yes, we're comfortable doing it. Yeah, that's, I mean, if you want to get an answer, I don't see how you're going to get an answer about asking people.
Okay. So that's his scope. Is that part of your motion?
Yes, sir.
Do I have a second?
Second.
Any other discussion? Okay, all in favor?
Aye.
Any opposed? Motion passes.
Can I add just one other comment about that before we move on?
Yeah.
So I would like, and I'm hopefully speaking for the rest of the audit committee, Mr. Swan, there are lots of forces in the city, political and otherwise, that seek to just have this go away. And I think what I'm hearing from the audit committee is that we want a fair answer about what happened and what controls need to be in place. I'm relying on external audit to look at the same thing, and to the extent that this audit committee needs to back you up on doing a full investigation needs to be done, like, we're gonna be there for you, and there's gonna be pressures to just make it go away, and please do your best on them.
Okay, next.
The only other item, just to kind of jump, last year is coming up to annual review of the Metropolitan Auditor performance, and last year there were some
Yes.
questions about me doing my own annual review, self-assessment, and so I just put the instrument out there. It's up for you to decide. Hopefully it will be covered in the next meeting in the end of June, so that's up to you to decide if you want me to continue doing what I've
We
been doing.
usually come up
or do
with a really
something
good
else.
plan the day before we have to make a decision. Can anybody remind me what the plan is so we can do it correctly?
And we're gonna have to rely on our lawyer. What I think the plan is that the scorecard tool that we need to fill out to the evaluation, that somebody, maybe legal counsel, distributes to audit committee members. We individually fill it out, return it to somebody, maybe legal counsel.
I have it docketed for the 1st of May to begin that
So
process.
you remember what we're supposed to do?
I've set up my calendar anyway. But
Okay.
it does involve
And in Mark's
communication
defense,
with the chair as well.
He probably sent it out before and nothing comes back. But maybe not to this committee, just the previous committee. So, okay, just,
So we got a plan.
we have a plan.
So I mean, yes, but I have docked on my calendar. It's pretty simple that we would, that I would, talk to the chairman and begin the process that you're describing, make sure that we are giving each
Yeah, I'm good with
individual
that.
committee member a chance to provide the feedback, and then that we have that in time so that the results of that will be available before you meet again.
Cool. Okay. Any other items we need to?
I think anything else is in the budget's here in the book. We're doing well.
The nonprofit item.
Oh, I was gonna, well, we don't have to cover that today. We can cover that the next meeting.
Okay.
Just
That's
to
fine
save
with me.
time, because I know we're past our normal attention
Yes.
span.
And do we have a need for any privates? Yes, okay. Do I have a motion to adjourn?
So, second.
Okay, we're adjourned.